couple of years ago, we looked at the long-term dynamics of the oil and gas industry, the energy industry at large. In that work, our analysis indicated that we could be looking at a sub $60 oil price. And that was a very plausible scenario, which nobody believed at the time. Now, the mechanism that led to the current situation of sub $60 oil is slightly different than what we had outlined in that work that we did a couple of years ago, but the major conclusion remains extremely valid, and that is when dealing with uncertainty in the future, it is much better to be prepared for multiple outcomes than it is to optimize, if you will, for a single outcome. And this conclusion is based on the observation that it really is virtually impossible to predict the evolution of the energy markets. And case in point, even though we saw the price drop late last year, it wasn't until Saudi Arabia reversed a very long-standing policy of cutting production in order to balance the markets that we actually saw a correction turn into a crisis. And herein lies the difficulty and the challenge for strategic planners. How do you account for variables that can be identified but still are unpredictable and can have a huge impact on the industry? Well, at Bain & Company, we've developed a process for dealing with uncertainty in the energy markets. And the first step is to define meaningful but plausible scenarios and to identify the triggers or the signposts that drive each of these scenarios. And then developing the capabilities to identify the leading indicators and extrapolate those so you can get some insight into what are the most likely scenarios. By testing your particular plans against the most likely scenarios, you do two things. One, you can build robustness into your strategy, as well as build contingency plans to, in essence, put a playbook on the shelf, ready to execute for whatever the future brings. Now, the details of this particular approach is spelled out in a couple of different Bain briefs. In the second Bain brief, we incorporate explicitly the key learnings of the most recent downturn, which is to say that we incorporate short-term dynamics into what was originally purely a long-term strategic planning effort.